Hi, it's Lee, and welcome to the Tesla Economist. So we just got the delivery numbers for Q1, numbers that some people deem as the most important delivery numbers to date, because they are. We've had more important production numbers in the past, when investors were more concerned about supply and whether Tesla can actually make electric cars on a mass scale. But now we care more about demand, and whether enough people want to buy a Tesla when the supply is significantly higher, and the economy is not looking quite as solid, with higher interest rates on top of that. As a result, of course, Tesla have lowered their prices of their vehicles in many markets, hence why this quarter deliveries was so important. We were going to see what level demand will be now Tesla lowered the prices. Have Tesla lowered their prices enough to get to the market clearing price where demand meets supply? For the delivery numbers, the most important were the Model 3 and Y numbers. We saw wait times reducing for these models towards the end of last year, with the combination of Tesla ramping up more vehicles and the overall economy reducing aggregate demand for autos. These Q1 numbers were going to show us that there is still plenty of demand for Tesla. Now they have removed the premium pricing. In Q4 last year, Tesla delivered 388,000 Model 3s and Ys. Q4 also had some price drops too, in order to incentivize demand. Q4 is always the biggest selling quarter of the year for autos. Q1 saw 412,000 deliveries for 3 and Ys, 24,000 increase in deliveries quarter over quarter, or over 6% increase. Given the state of the global economy and interest rates, I am happy with this figure. Q1 is also the worst selling quarter of the year, and this is actually the highest increase in deliveries from a Q4 to a Q1 Tesla have ever achieved. I think this shows that Tesla's demand is still strong, and it looks like in all markets. Tesla is still achieving this with really good profits, while still working on ways to reduce costs too. And at this stage, if Tesla lower prices just a little, it has a lot more effect on demand, implying that if Tesla needed to increase demand further, the price cuts wouldn't have to be anywhere near as dramatic and still maintain a decent profit. Also, as time goes on, Tesla are doing their best to reduce costs too, which could be passed on to the consumer anyway and not affect gross profits. The Model S and X deliveries were actually quite low and potentially disappointing, but we don't know for what reason yet. This doesn't really concern me that much. The Model S and X are becoming a smaller part of the company each quarter as the other models continue to ramp. The S and X are still priced quite a bit higher than before the refresh, so there is still likely plenty of profit margin there still if Tesla choose to raise prices. I would say though that due to the economy, it's likely upper priced vehicles are going to hurt more. I mean, imagine the interest rates these days on a new Model S or X. On the other hand, perhaps it might be due to Tesla's new logistics. Either way, I think that in the long run, this is nothing to be concerned about, and actually isn't even that important. With all models combined, we had deliveries reach 422,000, up from 405,000 in Q4, and production hit 440,000, but only up from 439,000 in Q4. So not really any improvement in production this quarter by the looks, which is a little disappointing, as we were expecting to see an increase in Fremont. However, Shanghai factories were down for a little bit in January, but I would hope to see production above 450,000 next quarter, hopefully even higher. 450,000 is the annual 1.8 million run rate that Elon said was expected production for the year on the last earnings call. This seems very doable at this rate. It won't take much of an increase in production to get there, especially if no factories are down. However, it's likely the Model 3 factories might be down for a little while sometime this year when they update it to the Highland version, and possibly the same again for the Model Y Juniper. However, we're hearing about progress at Texas and Berlin reaching up to 5,000 vehicles a week. If both factories have increased 1,000 vehicles a week, that's an additional 25,000 or so a quarter, which would mean we're looking at around 465,000 production perhaps for Q2, and possibly more if Shanghai has no downtime, so we could see closer to 470,000, or at least getting up there. So it is very possible that Tesla will beat the 1.8 million target for 2023. I'm not sure if they can get to 2 million, however. That would require Berlin and Texas ramping a further 2,000 additional units a week in the early second half of the year, which I guess is a possibility. The earnings report is going to obviously be the next important event. It's great that Tesla are still selling this many vehicles, but how much profit can they still make is the question. The two numbers we're looking for are average selling price and vehicle gross margin without regulatory credits. Yes, Tesla achieved a great delivery result, but at what cost is the next question. How much did Tesla sacrifice margins and prices and lower profits to get these sales? We were told that gross margins should still be in excess of 20% and average selling price above $47,000. These numbers are still very satisfactory and will produce some good profits with this number of deliveries, hopefully beating Q4 earnings. If Tesla do meet those expectations, then we would see $20 billion in auto revenues and $4 billion in gross profit for the quarter. This will be down quite a bit from Q4, which hit $5.5 billion in gross profit for autos. However, remember, almost $800 million of that came from FSD, deferred revenue, and regulatory credits. It would thus mean that gross profits for autos are down the equivalent of $700 million for the quarter compared to Q4, even though Tesla sold 6% more vehicles. This is the effect of the price cuts that we're going to see. From here, Tesla is really going to have to get their delivery numbers up higher to get back to those previous profits for autos. Luckily, we do have the growing energy storage side of the business that might hopefully make up for some of that. Anyway, like I said, I'm happy about the numbers. It shows that there is still plenty of demand for Teslas, even during these times. And remember, although Tesla have lowered their prices, they still aren't cheap cars. So the fact to sell that many of one model at these price points in this economy has got to be a good sign. This is what I was looking for. And like we say, production numbers are going to keep going up and costs are going to keep coming down. If demand is this high for these models at these prices at these times, then think about how successful a compact, affordable Tesla would be. The more I think about these numbers, the happier I am actually. And if the economy gets worse, then Tesla still have some margin buffer to lower prices and still make profits, which is just going to make it harder for the competition as Tesla squeeze them. There are also updates that will increase demand as well, like we said, the Model 3 Highland update and the Model Y Juniper update. Both of these will give Tesla a more modern look and feel, and will further boost sales, whilst cutting costs. The old Model 3 and Ys were upmarket vehicles with high quality parts. Now Tesla is a lower price vehicle, more mainstream. These updates will remove some of the more expensive items and replace them with more affordable, like removing the wooden dash and replacing it with fabric. But not just that, of course, updating the actual robot or smart car hardware. These cars will be fit with hardware 4 and 3 additional higher resolution cameras and many other features. This will also increase demand. So when I talk about the fact that when Tesla ramp up more supply, then it will be harder to find the additional demand and they may have to lower prices, well, perhaps they won't. It will just all depend on how much difference these future updates make to the demand. Now, as far as the stock price, well, Tesla missed deliveries estimates according to the media, so this will be interesting. Personally, I think the stock is more valuable with these estimates out, but it looks like the media may try and spin this negatively. It's on the lower side that most bulls were predicting, but I feel it's still plenty close enough. But perhaps the stock might actually drop a little, especially if the last run-up we saw was in anticipation of these delivery numbers. So there is a chance we may go back under 200. Or maybe the market will realise there's still a ton of demand for Teslas, and it might run a little. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.